Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. Boy, I'm liking it every day more and more the more I say it. It's Tuesday, it's September 26th. It's about 7:37 in the morning. The market's going to gear up to open up in about an hour and 53 minutes. If my math is still correct, I could still add and subtract. Welcome, welcome, welcome. Before we get into the hot stuff, the nitty-gritty, please make sure to like this channel, subscribe to my YouTube channel. There's a link to my VIP room that's free for now, and it's happening at noon today. You could find the link above or below this video. If you want hot intraday stock tips, lessons, answers, pictures of my assistants, the fuzzy ones, subscribe to my Telegram group. Go to rogerscott.com/Telegram. Once you're signed up for Telegram, you just click that link and it'll register you into my channel. There's no cost. You'll get a lot of goodies and you'll regret it if you don't sign up. I'm telling you. All right, now let's get into today's video. Boy, I did all that in less than a minute. I'm getting fast at this. All right, so as you can see here, the Nasdaq is down about 58, a little bit beyond random. I don't like this. The Dow's down about 109 points. As I mentioned yesterday, the market right now is in a flux. Let me give you an example so I can kind of show you what I'm talking about here. If you look at the SPY, I want to give you a good analysis of this so you see where we stand. Now, we had buyers coming in yesterday, and we're right now, again, right at this support level. Now, what I said yesterday was this. I said, I like what I'm seeing right now, but unless this bar gets above the previous bar or even this bar starts heading to the 50-day moving average, this is just going to be a little dead cat bounce, and we're going to head lower. So that's one of the reasons why I told investors to keep their powder dry, because this is not a turnaround. It could be a turnaround, but we won't know if it is or not. My suggestion, and honestly, when I say this is a suggestion, I'm saying it very lightly. This is what you need to do. Wait till the S&P is abutting the 8-day, which is right here, or the 100-day moving average. Don't go long, or don't go aggressively long. Keep your powder relatively dry. Keep your positions low to the long side, real low to the long side, till we start gearing up here. Right now, from where I'm looking, this doesn't look all that great. And if we don't start taking out yesterday's high, which is at, write this down, 432.27, or the day before high, which is at 434.10, nothing good's going to happen. We got to take out these levels, and I'm not seeing any of that. And right now, if we don't even take out yesterday's high, even on a random swing, and if we take out yesterday's low, Now, yesterday, we took out the previous day's low, but we rallied like there was no tomorrow into the end of the day, which was very positive. But again, I mentioned we're sitting on this trend line right here. And if it gets knocked, if you knock at the door long enough, somebody's going to open it. So again, we did it. Let me just show you what I'm talking about. You could see right here is a strong trend line. But again, if we keep knocking it and if we don't bounce back fast, it's going to be all over. If you look at the QQQ, just to give you some perspective, it's doing the same thing. It's not as extended, but you can see how we're just sitting right there. That's not good enough. I need to see some proof that the market has passed this Fed announcement that rates are going to stay higher longer. Wow, what a surprise. I mean, who would have imagined that? Obviously, I'm being sarcastic, but you guys know what I'm saying. We need to see some upside. If we don't see some upside, I'm not really going to have a lot of conviction in this market. And that also means your stocks, one way or the other, are going to have to do the heavy lifting. We usually want the market, we want the tailwind in our back, either to the upside or to the downside. And if the market sits right here and doesn't go anywhere, the stock is going to have to do most of the lifting, up and down. This is just simple common sense that a lot of folks don't seem to realize. But be very, very cautious while the market is not moving around here, because again, you're leaving a lot to the stock, and the stock reacts 70% to the stock market. So if you get the stock market wrong, you only have about a 30%, 25% chance of getting the stock right. Again, just want to make sure you understand. If you look at the Dow, just kind of want to show you where all these trend lines. The Dow's already at the 200-day moving average. The Dow's already said goodbye. I'm past that. I'll see you guys later. Interestingly, it's right below that level, but it's got another level right here, and this is a very strong support. So the fact that the Dow is at the 200-day line is a little bit better. The fact that these highs have gotten lower, high, 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 these highs are all lower, is not a good sign. So if the Dow breaks, it will not be great. Now, I like the 200-day line, and the 200-day line offers a lot of support. I want to see a bounce. I want to see a bounce from the 200-day line to the 100-day line, or nothing good is going to happen. Crude oil is holding on. It hasn't been that great the last 3-4 days, but it's holding on okay. It's not really doing anything crazy here. This is good stability. It's still kissing the 8-day EMA, which means it's still on the upside if we get a bullish day, and I think we may, because on the Dow, on the blue chips, because we're sitting at the 200-day line and we may bounce, as I just showed you a second ago right here. See, we're sitting right at the 200-day line. Need to go above 34,000. We're at 33,898. We need to go, we're down 100 points right now. We need to go up above 34,000, 34,100. That'll be the golden ticket. Now, here's what I don't like, but I think it's done, which is good. This is the reaction from the Fed, and interest rates are at a, 14, 15, don't quote me, but at a multi-year high. Interest rates, when this happens, this puts pressure on technology stocks. This puts pressure, higher interest rates. Now listen carefully. I'm going to give you a little fundamental lesson here. Consumer staples have a really hard time going higher when interest rates are higher because they become more expensive. Same thing with real estate. Real estate becomes more expensive. So when you see a bond market going down like that, it puts pressure on consumer staples, on real estate, and on technology. It puts pressure on most sectors, but it puts the most pressure on technology, on consumer staples, and on real estate. I want you guys to remember that. Now, let's talk a little bit about what to expect from the market today, and in terms of broad market, and I'll tie everything up with a bow tie for you. Market participants continue to price in extended period of elevated interest rates. We just saw the bond market. Amazon rose after the retail and tech giant said it would invest up to $4 billion in an artificial intelligence startup. I talked about that in my VIP room, which is happening at noon today. And if you were there yesterday, you would have seen me talking about that. Morgan Stanley said the recent decline in the stock has created another buying opportunity. That's very, very interesting. Well, the Dow is at the 200-day moving average. Chicago President Austin Goolsbee stated in CNBC on Monday that the United States could still avoid a recession. Minneapolis Fed President Neil Kashkari said he expects the U.S. central banks will need to implement one more interest rate hike this year and keep policy tighter for longer given the robust economy. He's right, the labor market. Meanwhile, there's only an 18% chance that they're going to raise rates in November. In November, yes. And I keep forgetting that there's a rate hike, there could be a rate hike in December. I keep forgetting that they meet in December. In November, and a 34% in December. Keep your eye on these. I don't really buy these. I think the rates are a lot higher. The odds are a lot higher that we're going to increase rates in December, but what the hell do I know? We've got Costco earnings today. We got Ferguson earnings today. We've got Cintas earnings today. Jamie Dimon suggested the possibility that interest rate reaching 7%. I think about 6.5, 6 3/4. I don't know about 7, but this guy's smart. We've got consumer confidence data today. Very important. That's going to set the tone. You've got U.S. building permits and new home sales. Watch this very, very closely. The U.S. Richmond Manufacturing Index will be today. Europe is down as investors express concern about the potential for an extended period of elevated interest rates. Technology and real estate stocks are pushing the market lower, which is not good for us. We're not getting any reprieve from China. They're waiting on the market. Closed lower as concerns over a greater meltdown in the country's property sector and geopolitical tension dampen market sentiment. No soup for us from China. Japan closed sharply lower today with sentiment being weighted down by lingering concerns about future interest rates in the U.S. So again, things are not doing as well as we expected. And again, I'm not happy about this interest rate. I want to say interest rate rise because bonds down means interest rates higher. But again, I believe the market has priced in more of it, most of it. I like the fact that the Dow's at the 200-day and is at major support level here. Let me just delete this. And what I don't like is the fact that the QQQ is sitting on a major trend line. What I also don't like is the fact that SMH, the semiconductors, already busted through that trend line. Don't like that. And XLRE, let's take a look at real estate. And real estate, see that? It doesn't like higher yield. Let's look at consumer staples. Oops. Doesn't like higher yield. I'm telling you, bonds, there's a huge correlation, negative correlation between interest rates and consumer staples and real estate. There's a positive correlation between bonds and real estate and consumer staples, because think about it, higher interest rates impact food prices quite a bit. All right, so you guys know where I stand. Now let me talk about some day trading stocks, and let's talk about strongest sector, weakest stock, all that stuff. So right now, as you might have imagined, the last few weeks, utilities, energy, communications holding on, healthcare's holding on. Communication is the only tech sector that's holding on. The Dow, this is where the strength is. Yesterday, let's look at it yesterday. Healthcare, Dow Jones, energy, utilities. Retail is starting to come up. That's very interesting because retail was all the way here and home builders were right here. XHB, let's look at XHB real quick. Probably not doing so hot. Yeah, see, they broke that trend. And below, between the 100 and 200. This is not positive. So I just kind of want to show you what's going on right now. But again, you want to be in the bluer chip stocks for the time being. You will have more upside potential with blue chip stocks, at least for the time being, than you will with the other type like tech stocks. Blue chip stocks. Now, let's talk a little bit about strongest stocks and weakest stocks right now. All right. Ooh, I like Lilly. I like Lilly at support right here. If Lilly, okay, so I like Lilly. Obviously, it had a downside, but I like the support. I want to see Lilly trade above yesterday's high, maybe even above 570. If it would, I'd like it. Here's what I love right now. A Calm Technology. Look at this thing. Constellation Energy. Molina Healthcare doesn't look bad at all, and Marathon Petroleum. Those are the stocks I would be focusing right now. VLO looks really good too. To the downside, oh, there's some doozies here. I don't like Dollar General. I don't like Solar Edge. These two right here. Don't like those at all. I don't like Coach. And I hate Dollar Tree, and I've been talking about Dollar Tree all the way down. I still don't like Dollar Tree. So again, be careful with the shorts. Wait for the market to show its hand. Wait for the S&P to cool off. Be very, very nimble right now. This is not a time to be a hero. Now, stocks that I like today. Here's what I like. I like FedEx. I really like FedEx a lot. I think FedEx is going to continue moving higher. It's got great relative strength. If the market continues moving higher, FedEx will break out. My suggestion is to wait for it to trade above 268. That's the high. And if it stays there today, that would be a great buy. Now, here's a stock to day trade. Do not hold this overnight because it's got earnings today. So here's what you want. If Costco takes out yesterday's high, 562.55, towards the end of the day, like the last hour, it's a great day trading stock till the end of the day. Do not hold Costco overnight. It has earnings, and we don't know what it's going to do. So wanted you to be prepared and understand where we stand right now. Don't make huge bets right now because we don't know which way markets are going to go. Be very nimble. Be very cautious with holding positions overnight right now. It really is a day trading market. Now, folks, get ready for a groundbreaking revelation. The trading secret Wall Street doesn't want you to know about. Think of it as your back door. Yes, your backdoor ticket to some tidy income plays. Man, I love that. Believe me, you won't catch wind of this on CNBC, Fox Business, or anywhere else online. So here's your exclusive invite. Join seasoned market guru Jack Carter and brilliant options tactician, they call him, Lance Ippolito at 1 p.m. Eastern time today. Trust me, you don't want to miss this. Save your seat, follow the link below, and you can also find my link for the VIP room there as well below this video. I'll talk to you guys later. Have a great day. Send me comments below the video on YouTube channel or send me an email, roger@rogerscott.com. Bye.